gap up on the stock Monday, and then preceding that, the good Prop 22 news. Look, I think in the kind of over the next 12-month period, the vaccine news is probably the most impactful development for Lyft. And the fact that we've got a vaccine here with apparently 90% plus efficacy really couldn't come at a better time, or can't come soon enough for Lyft. If you guys remember, prior to the pandemic, Lyft was really the share gainer in U.S. ride sharing. They were growing faster than Uber, had a very loyal user base that saw the brand as kind of more socially responsible, and sort of more kind of better corporate values. Very loyal user base, as I said, but that loyalty, I think, is really going to be put to the test when we come out of the other side of the pandemic. People haven't really had an opportunity to open their Lyft app much lately. So the faster we can get a really effective vaccine and kind of back to quote unquote normal, I think it'll be easier for Lyft to kind of restart their growth, if you will.
Have they regretted at times over this past 6-month period not being in food delivery and being pure rideshare? And will that opinion change as we get into next year?
Yeah, look, I think they're probably regretting that they're not in that business right now. I mean, before the pandemic, around the time of the IPO, that was viewed by many as a positive, that this was a pure play ride, a way for investors to kind of just expose themselves to ride sharing as a pure play. Back then, too, the online food delivery business, had good growth prospects, but hadn't exploded as we've seen since the pandemic started. So, so far, Lyft seems pretty adamant that it's not going to, try and become an online food delivery platform. You have seen them, sort of maybe dip their toes in the water with some partnerships around delivery of some items and sort of medical necessities and stuff like that. But I think it would be a big surprise if Lyft decided that they were going to try and build an online food delivery.
So which one's a better value right now here, Tom? Lyft or Uber?
Look, we've got buys on both of them. With Uber, we think that the benefit of having, A, a larger business, B, a business with two main products on the platform, potentially a third big product with grocery, that just is going to lead to a more liquid marketplace, probably better margins over time. But, it trades at a couple, 2 turns higher on next year's revenue than Lyft does. We still think Lyft has got an interesting risk reward here. Again, we really want to see things get back to normal quickly. We think the sooner things get back to normal for Lyft, the easier it's going to be for them to restart their kind of growth engine without having to rely on heavy incentives or promotions to get things going. But, it trades less than 3 times next year's revenue. We do see a roadmap to profitability here. Maybe not next year, but we think that both stocks offer interesting risk rewards.
Tom, thanks so much. Much appreciated.
Shepard Smith here. Thanks for watching CNBC on YouTube.